Hello, this is John Piper with the weekend video clip, and it's Saturday the 25th of October, and we're looking here at the hourly chart of FTSE. We saw the peak here, had an initial decline down to there, then quite a lengthy correction to there, then a wave 3 to there possibly, 4 and 5. There are alternative counts, but that seems to be the best one. I guess we could subdivide this slightly differently. I think it's worth looking at the internal logic, as it were. I mean, that could have been 1 there with 2, 1, 2, 3, 4, maybe 5. So wave 4 could be there, in fact. And then a final 5-wave decline there, which is quite neat, although the wave 3 is a bit short. Anyway, since then we've seen, so let's first look at time again, about 5 weeks, 1, 2, 3, 4, 6 weeks. We then seen an A, and a B, and a possible C, and we've just taken out the Fibonacci 38.2% level. So in terms of a fairly feeble correction following a sort of sharpish decline, that's what we've seen so far. The only sign of strength has been the lack of any real decline. What we could see now is possibly a B wave followed by a C wave rally, maybe around the 50% level, 6.5. So at the moment, FTSE still looks pretty bearish, with the need to see some kind of confirmation of that, because at the moment we've just really gone up. So look at the shorter term chart here. Yeah, the action since the peak that came in fairly late on Thursday has really been just sideways. That applies to most markets. So look at the DAX now. Well, the DAX has been a bit stronger than the FTSE. This is a secondary peak, as I mentioned. Clear 5 waves down. 1, 2, 3, A, B, C, 4, 5. We had again a fairly subnormal B and a C up to test the 50% level, and yesterday the 9,000 level was quite key. Let me go down low. Okay, so 9,000 is around here, and all the DAX did was bounce up and down around it, which was not terribly helpful from a trading point of view. This doesn't really give us much information. It certainly doesn't suggest that this peak is of any great importance. We did close the gap yesterday, fairly marginal, but it did actually get closed. But it doesn't look like the start of something, so it would suggest we're going to go higher, but maybe not much higher. But again, we have a 5-wave decline followed by a fairly corrective bounce. Let's look at the Dow. But the Dow looks a lot more positive. Right now it looks like we've seen an ABC, in fact, A, B. The B could be to there actually, and then C. This looks pretty impulsive. Again, we've got, the declines are fairly mediocre, and very quickly we've got buyers have come in. We've got QE being raised again, all the positives coming out, and the Dow looks, I say, a lot more positive. We're right on the 61.8% level. I said yesterday that we might well see a reversal from here, so let's have a look at that in a bit more detail. Here's the 10-minute chart. We've got the Fibonacci level just here. So 16767 or thereabouts. Sorry, it's probably a bit hit. So I've got too many lines of this chart. I think it's that one there actually. So you see the market fell off from it early on the day, but the decline was almost a 5 with actually, but that was the previous day in fact. Let me just start again, it's going to be confusing this chart. Right, the Fibonacci level, 6.8% level is there. So on the Thursday we saw the retracement, possible 5 waves, retest of the low, so it became an ABC. Then bounced right up to that Fibonacci level again, fell back, and in later trading I managed to creep above it, just above 16,800. So obviously positive action, but we haven't really broken away from the Fibonacci level. Still due a pullback, so I think next week will still be quite negative, but obviously needs watching, depending on how this rally develops. Look at gold now. Right, gold has now seen a pullback. This is quite important. How that pullback is treated will be the first clue we've got really. Ideally for the gold bear bulls, we want to see buyers come in, thrust us up, take out this high, and finally see a higher high for this rally over the intermediate term rather than the very short term. Let's go down a leg here. Okay, looking at the move so far, this wave here could be counted either way really. There's no clear count, although it looks fairly impulsive, but there's no clearly identifiable third wave, no third of a third. That tends to mean it might be corrective. This is actually slightly sharper, but it's now given way to correction. I think probably we're seeing an A, this might be a B with perhaps a bit more to come, with a C wave to come. So I think 1200 is going to be tested again, and again I wouldn't be surprised to see it go back below 1180. That's certainly a possibility, and that would then clear the air. It may of course go back to 1000. I mean, you know, once you see support broken, but again I still believe we're going to see gold come into its own again, but we haven't yet got any clear signs of that. Finally, pound dollar. Right, no change here. We've still got the 2 counts. Either we've got a 1, 2, 3, 4, and a 1, 2, 3, 4, 5. In which case we've got more upside to come, or we've got a 1, 2, and then a 1, A, B, C, and then a bigger fall coming in fairly short term. We're now late October, so obviously, you know, the Xmas rally influence is only a few weeks away now. I mean, it tends to come in some point in November, so within 3 or 4 weeks we could see the markets start to develop a base for the Christmas rally. So at this point in time there is that big question mark: is it too late now for equity markets to fall back this year, and will it in fact be a January affair perhaps? That remains to be seen. We'll have to monitor things and see how we go. But having missed the bears, having missed the October opportunity, as I say, we start to get this year-end influence, which could now keep markets ahead for the rest of the year. But that's something we'll be looking at in more detail as we progress. Great, thanks for listening. If you found that interesting and useful, back with the open report on Tuesday morning for subscribers. Have a great weekend, and bye for now.